Hi, everyone. Welcome back to the Commercial Real Estate Library podcast. You know me, Dama Tamanawala. You know my co-host, Garrett McGillivray. And today we are joined by Andrew Hoffman, CEO, and Bader Elkatib, Vice President at CentreCourt. Gentlemen, thanks for joining us today.
Thank you for having us.
Okay, great. Let's dive right into it. So, you know, CentreCourt, for those especially based in Toronto, they're very aware of CentreCourt, some of your development projects, and the wild success that you guys have had over the last 10, 11 years. But for those who don't know, and for our audience that are more based on the West Coast, can you share a little bit about CentreCourt and how you guys got started?
Sure. Maybe I can take you back to the very beginning. So it was the summer of 2010. I had left Menkos Developments after 21 years, and I was looking for a name for the firm. And you know, one of my best sources for information and ideas is my 84-year-old mother. I called her up and she came back to me literally within a couple hours, and she said she had the perfect name. So even though I was skeptical, the name she came forward with was CentreCourt. She had been watching Wimbledon. It came up on the screen like a number of times through the course of the Wimbledon event, CentreCourt at Wimbledon. And I loved it right from the get-go. Firstly, because of my passion for tennis. Secondly, the connotation to the downtown and the epicenter of urban life. And thirdly, it was my mother's suggestion. So, you know, CentreCourt was formed. The focus was at that time and continues to this day to be on high-rise residential development in the Greater Toronto Area. And really over the 10-year history, you know, we've become one of the largest developers in the market, you know, completing over 4,800 units. And we have about another 4,000 units under construction or in our pipeline. But the thing I'm really even more proud about is, and the success of the projects and the returns we've achieved, is the nature of the business that we built and how we've, you know, tried to differentiate ourselves from other residential developers in the market. And, you know, we've tried to combine that entrepreneurial approach that you see in the family-run residential developers with the institutional approach that you see with commercial developers, with all the functional areas fully integrated from construction, sales, customer care. But then we've layered in a private equity incentive compensation structure, which kind of pulls it all together, where we have like an organization with highly motivated team of really smart and dedicated people that are passionate about development, and that they're fully aligned to come up with, you know, great projects and great project outcomes.
Yeah. Interesting. Okay, we need to dive into some of the specific projects, because you guys, I mean, there are so many successful, I mean, all of them I think are successful at CentreCourt. But prior to doing that, do you mind taking us back to the beginning? You know, now we're talking about, I think I was on your website, 6,000 units in the pipeline. You said 4,000 units in the pipeline, 4,000 have already been developed, and the number grows every day. But how did you get started? Like, what was the first development project that you did, and how did that come together?
Yeah, I mean, it was a site at the corner of Peter and Adelaide. It was an assembly site of really two properties. I had institutional capital relationships with some Boston-based pension fund capital, and it really just started really with a team of myself and hired on Jonathan Levinoff, who continues to be part of the core team to this day. And we just started off on that one project, really focused on rolling up our sleeves and delivering great product in a efficient time frame and achieving good project results. And really the systems and the approach and kind of the various aspects that we've integrated into our business is really just layered onto that, project after project. But it started off with one project and kind of built up from there. I'd say a key aspect too has been kind of the relationships that you build up over a long career. So, the second and third projects really were brought to me by, another residential developer that had too much on their plate and And I had a strong relationship with them, and they came to me with a view to, doing a 50-50 JV with us kind of taking the lead on the development side. And those were our second and third projects, and things kind of just layered on from there.
Interesting.
So you talked about sort of the first site. Looking at things now, you obviously are a significantly larger company, a lot more resources that are under your belt. What are some of the important things that you look at when you do choose a site? Because you obviously look at, a great deal before you pick the particular one to build, a massive tower on it. What are those characteristics that you look for?
Gary, that's a good one. Yeah, Gary, that's a good question. I'm sure you've asked that to a few other folks on this podcast, and I'm sure you've heard different responses. Depending on who you're speaking to in the industry. But really, for us at CentreCourt, what we believe is a great development site tend to be pieces of dirt that are transit oriented. 500 to 700 meters of a major transit station, really proximate to major employment hubs. Right, within established condominium communities, we're not, we're certainly entrepreneurial, but we're not so entrepreneurial that we're going to be the very first condo in a brand new area that's never absorbed condo product before. And then most importantly, has the potential for high density. In our world, that definition certainly, changes and evolves depending on the exact location, but minimum of 250,000 square feet is really kind of what we're looking for. So, those are the 5 or 6 things that are always on the list. The one thing I'd say about our program is we don't shy away from a challenge at CentreCourt. We're truly open to opportunities that require some creative problem solving, whether it's the heritage considerations, lease encumbrances, challenging construction conditions. Over the years, the team's really developed this expertise to really tackle those complicated projects. So really, the more hair on a deal, the better. And if it has, the transit orientation, the density, that really gets us excited.
Interesting. Sorry, Gary, go ahead.
I was going to say, what are your thoughts on, you obviously develop a lot of condominium projects, but having sort of that mixed use product in terms of obviously there's certain developments that have, 2-3 floors of retail, office, or some form of conjunction. What are your thoughts on that?
Yeah, I mean, my background, prior to starting CentreCourt was actually more so on the commercial development side. So I'd say, it's certainly a product category that we're comfortable with. I'd say, our business model right now is more of an inventory base that we're not looking to, buy and hold on for the long run. We're looking for, excess returns. And, given where cap rates are at today, our program would be, if there is a retail component or commercial component to a development, we'd certainly, underwrite that and integrate that into our development, but we'd likely have an outlook of monetizing that on project completion.
Okay. I had a question about, is there any secret sauce to structuring the perfect deal? I mean, one of the things you always hear about CentreCourt, or I've heard this, is that you guys are just an extremely profitable company. And you know how to make development sites work. But a lot of that starts on that initial acquisition. And, Batter, you're mentioning some of the characteristics that you look for. Is there anything involved specifically in structuring the deal with a landowner in order to have the best outcome?
It's a very good question. I haven't heard that about CentreCourt. I often hear mostly about our execution.
Okay.
And our ability to unlock really creative opportunities, and I think that's what we take a lot of pride in. But look, I don't think there's a secret sauce, Dama. I think really it's about knowing our business intimately to identify where the risks lie, and then it's a combination of keeping those as key priorities when you're negotiating a land deal, while listening to the landowner and understanding what their objectives are to actually get a deal done. It's that combination, I think, of patience and really understanding what deal points are needle movers. And certainly, I think we take a unique approach to structuring deals. My belief is, there's no there's no cheap land or value out there. Everyone's very educated. Everyone's very sophisticated. So it's all about how you can create value as a buyer. Call it either before the acquisition, during the acquisition, or through the sales program and construction development. So I really think our success is obviously there's a lot to be done in the deal structuring, but it's really on the execution front to really make it all work.
Okay. Interesting. I want to just take it right to 8 Wellesley. And I don't think this was in the question sheet, guys, but I'm sure you're happy to talk about it. One of the most successful projects that we've seen recently. I certainly saw a few articles about it. Wild success at your development project there. Are you able to share kind of what you saw and how it maybe differed or was aligned with your predictions at the outset of that project?
Sure. Yeah, I mean, I'd say through the pandemic, we saw a lot of resiliency in the market, and in the summer of 2020, we launched a project at 199 Church, and I'd say from the summer through to the fall, we saw robust activity within our market, a lot of sales and demand that candidly surprised us. I'd say like in the latter part of 2020, things slowed down again because of the lockdown, and so we were geared up, and our focus was always on being prepared. So in the case of 8 Wellesley, we wanted to be fully prepared for a sales launch. So we had the whole marketing machine geared up. We had the marketing materials. We had we got Messiah Jury as part of our marketing launch and had all that in the can. And it was just a question of, pushing the button at the right time and ensuring that at the point we did push the button, that we'd have that type of buyer reaction that we were hoping for. And it was a judgment call. Do you move into the market before others do, or do you wait for the certainty that the market is there? And we just made the judgment call that we had the right location, we had the right product, we had the right pricing, and if we had the market to ourselves, that would be a real advantage. And there was deep pent-up demand, and that kind of proved itself out both in terms of the volume of sales. We sold through 600 units in a period of 10 days, and the price point was right in line with what we had hoped for. So kind of all came together, and it's not only good for us and good for that particular project, but it's good for the market. It really instilled a lot of confidence in other developers to come to the market, and that's a great thing about our industry, is that it's a deep enough industry that just because you do well doesn't mean you don't want other people to do well. So we're really happy that we started 2021 on a positive foot, and we're looking forward to seeing our competition do well, and we have more projects that we'll be bringing to the market in 2021 as well.
Wow, that's just staggering. 600 units in around a week. I mean, can you share a little bit with? So we talked a tiny bit about what goes on in selection of a site. Now we're jumping forward to actually, the sales aspect. Maybe we can dive back to the middle, but what's involved in that? Having such a successful sales run. You mentioned, Andrew, pent-up demand. Are there other? Obviously you guys are executing at a very high level. Are all of those condos being sold domestically, for instance, or do you have kind of an overseas operation that some of those are going to? What's kind of going on there in the background?
Yeah, we do not. I mean, we have a limited amount of overseas, like 3 to 5%. It's all domestic buyers. It's locally focused, and there's just a deep demand for condominium product in our market. That if you look at the spread between single family homes to condominium, that spread is greater than it's ever been compared to historic periods. So I think that pent up demand is there, and a fair bit of the market is investor based at these early stages, and those investors do not want to be putting in their money in the stock market or in the cryptocurrencies. They want hard assets, and they've got a comfort level in owning housing.
Interesting. Okay, good to know. You guys are not putting your money in Bitcoin then. Okay.
Damon.
That answers my next question. All right.
You got to readjust your portfolio, Damon.
Yeah.
I'm not dissuading you from it. I'm not dissuading it.
So on that basis, obviously you guys still see the strong strength in the real estate market for years to come. Do you see any form of, blip that might be coming in the coming years, whether that be due to inflation or, maybe overdependence on real estate? Like Canada as a country has, real estate as a large percentage of its GDP. Do you see that as any form of concern?
Look, I think we take, if you take a step back and just think about Canada as a whole, I think we're very optimistic about our prospects, certainly for 2021, based on what we've seen so far, and certainly for 2022. There's been just a tremendous amount of government stimulus that's been put into the economy. So whether that's through tax measures like the payment deferrals and the rate reductions, or if you focus on the employment-related measures, so whether that's the temporary wage subsidy, the Canada Emergency Wage Subsidy, the renewed immigration strategy, for instance. So there's a lot of really positive momentum, and I think that momentum, really coupled with the fact that Canadians have curtailed their spending over the last 12 to 18 months as a result of the pandemic, and we're hearing as much as $100 billion of cash sitting in savings accounts or on the sidelines. As per that Benjamin Tall report that I think we've all probably seen at this point. I think those two things really make us comfortable with the prospects, certainly of Canada, and then Toronto is only going to, I believe, and I think we believe, is only going to benefit to a greater extent. So that 7% GDP figure that I think Ben Tall references on a few occasions, for us, that really feels like an achievable number. Again, based off of all those measures, and I can't emphasize enough just the borders reopening, like 1.2 million immigrants over the next few years, and I think for the real estate folks in the world, we all know the immigrants coming into the country are folks who typically have employment lined up, who are earning a very good wage. They need rental housing, so I think the rental market's going to see some tremendous demand, and then eventually those people convert into homeowners, which feed into the condo projects that we build. So all in all, very optimistic, and we certainly see that GDP forecast, and we don't have any concerns about that, and certainly not with our Toronto lens on.
Gotcha.
Yeah, and I'd only add, I totally agree with what Bader just said. The only thing I would add is we don't run our business based on short-term forecasts. It's a mug's game to try and forecast on the short term or even the medium term. I'd say, if we had done that, we were in a pretty negative outlook on how 2020 would play out. So our business model is really one of, we're huge believers in Toronto over the medium long term. We know that the condominium market will be a robust market over that period of time. And so if we buy great sites, we design them the right way, we position them for launch, it'll just be a question of time when we bring them to the market and execute on our development program. And that's really the keys to good execution, rather than trying to make predictions about the shorter term.
Gotcha. I guess that. Go ahead, Damon.
Oh, I was going to say, just in relation to execution, because I asked somebody about you guys in advance of this call, and one thing they mentioned was, well, CentreCourt is just known to be on it, is how they described it. They said that you guys are hyper diligent, super responsive, and that was one encapsulating term on it. And can you talk about some of the mistakes that maybe other developers might make going through the process of entitlement, or going through the works of a development process that other people maybe should go for?
Yeah, I mean, I'll put it in the more positive way of how it works within our organization, and why I think that we're able to execute so well. And it's really in our DNA to be proactive and methodical in our development approach. And And it starts with a business plan and a blueprint for how we execute, and the various aspects of the development program. If you think of the steps, it's you go through your zoning and entitlement phase. What can you actually build and what can you get your approvals for, and you move to design development. Designing the buildings from the inside out. You see a lot of developers get caught up where they want to have like a star architect, and it's sometimes driven by ego. Like our focus, we're very proud of our buildings, but we're pragmatic too. So we first look at what can you physically build on the site? What's the floor plate? What are the unit mixes that people actually want to live in? What are the size of the units and the livability of those units and the amenity programs that people want? And then we lock on that floor plate and the mix of units. And then, it's amazing what architects can do, even though like the standard floor plate might be that floor plate that goes, from the bottom of the building all the way to the top. But they can create that articulation of exterior through just materiality and other means. They don't need to, come up with these, curved elements and other atypical floors that complicate your construction, complicate your sales program and other things. So design development, then sales and marketing. We have an incredible guy, Jason Lamb, who's got deep relationships with the brokerage community, and we come up with what we think is great, effective marketing campaigns. And then the internal construction team, again, that alignment of the construction team and how they're focused on execution, and then the in-house customer care. It really comes down at the end of the day to the people, and having smart, well-aligned specialists in those areas, one business leader that kind of oversees and orchestrates all the different functional areas, and just having them drive towards results. And I guess our main measurement for success, we're proud of the architecture, we're proud of the nature of the projects, but we're driven by IRR and project execution. And I'd say that might be a differentiator as well, that some developers maybe just look at aggregate dollars. It doesn't matter whether it takes them 5 years or 15 years. We're driven by execution in a time frame that's where the returns and the risk and the overall return profile is taken into account.
And if I can add one thing there, I think one of the things that I think if you talk to anybody on our team is just our principles. Like Dama, you mentioned everyone's kind of just on it. Like it's and Andrew said it's part of our DNA. It really just comes down to our corporate principles. Like respond to people in a timely fashion. Right, be transparent in your communication. Make sure you've done the homework before you've replied or have a response. Like make sure you know what you're talking about. And do that all again, like transparently, quickly, and be honest when you don't know something. And I think if you do that consistently and enough, people recognize it, especially when they've had different experiences, right? So I think it's everything Andrew said, and I think it's just making sure that when you walk in the morning, you know what the expectations are of you vis-a-vis our principles.
Okay, I mean that makes sense to me. It sounds like you guys just have a shop full of rock stars, and that's kind of made its way into the culture, which is amazing. I would be remiss if I didn't ask, what sort of IRRs do you typically see? You don't have to share that. You can keep that private, but I'm wondering.
Yeah, well, no, you know what? Again, in our spirit of transparency, like we'll underwrite when we buy a site. We'll underwrite to 15 net IRR on capital, which I'd say is as razor thin as you'd want to underwrite to. And then fortunately through execution and perhaps market conditions, we try and be honest to ourselves how much flowed from market improvements and how much flowed from execution. And I think there's been that equal combination. But we've been of our 9 completed projects, we're well north of 20%, as high as 80% IRRs on our project.
80%. Wow.
Yeah, I guess that's how you become the 11th fastest growing company.
Yeah.
Right. So, a couple quick questions. Actually, one quick question before Garrett, you dive in. You mentioned for 8 Wellesley, Masai Ujiri being on board, and I forget which other developer was working with Pharrell on a project, Pharrell Williams.
Yeah.
Like how how much does that play into the marketing? Do you think that we're going to start to see a lot more of that? I would love to see an OBO development, for instance.
It's a good question, because we we debated internally whether or not it was it was a worthwhile endeavor. Maybe I'll say two things. Do we think it actually moved the needle vis-a-vis our total revenues? Obviously it's debatable. We don't think it necessarily moved the needle that much. I think it was really to tell people the story of Toronto, and I think the market really needed it because of all the negative publicity and headlines you've been hearing about the downtown. So I think having someone like Masai, who, and if you listen to the actual interview, we didn't talk real estate, right? It was all about what makes the city so great and the downtown an awesome place to live, which I think we all truly believe. It was really a reminder, and but certainly I think having voices like his and others who have a real connection to the city, who believe in the city, reminding people why it's so great. When we're all working kind of in our basements, potentially outside the core, it's a good reminder, and I think it was really well received. I really don't view it as a marketing tactic as much as a almost as an educational reminder to our buyers and hopefully to folks in the business who are potentially having doubts.
Right. Interesting. It also goes along with your name, CentreCourt, which obviously is a tennis reference, but yes, not everybody knows that. So
yeah, maybe basketball. On the topic of affordable housing, there's a lot of different legislative things that the government has been experimenting with and trying to do. Vancouver implemented the vacancy tax because they have a little bit more of a problem with foreign buyers putting money into the market. What are your thoughts on things that perhaps the government could do, or something that could happen to help them achieve that goal of making things a bit more affordable?
It's a good question, Garrett. Look, I mean, we know locally there's been a lot of talk about affordable housing for some time, and more recently, about inclusionary zoning in particular. And I think that our expectation and the industry's expectation is some type of legislation will be forthcoming in the next 12 months. It's call it a near reality. What the particulars of that legislation will be are perhaps to be determined, or will be determined in the next little while. And our opinion is really like inclusionary zoning or some of these tools that people are talking about is really only going to make the development and construction of new homes candidly far more difficult. People don't really, I mean, if you run the numbers, which we have, it's going to take a lot for the market to absorb such a shock. It's going to really result into a material reduction in land prices, or alternatively a material increase in the selling points of new condo units, right? So it's either going to dwindle supply because folks like ourselves can't actually go out there and buy land because the values are now impaired, and we either need the market to catch up, or the end buyers are going to be subsidizing those affordable units in some way, shape, or form, only making it more expensive for them to actually break into the market. So and all in all, the result of either one of those things happening is just less housing. And I think we all know how hard it is to produce housing in the GTA at this time, whether it's because of the extended rezoning process, the lack of land, like the disconnect between buyers' ability to pay and sellers' price, or the fact that it takes us several years to actually build a building. Our opinion is in the short to medium term, really it's going to result into less affordable housing for a whole lot of people who need it.
And yeah, the only thing I'd add is I agree that the equation is pretty simple. If you impose that type of tax effectively, it's one of two things. Or one of three things. It'll either come out of land price, it'll be paid for by the buyer, or it'll be coming out of the margin of the developer. And there's not enough margin to be able to absorb a 10 to 20% affordable housing. The unfortunate part is when they talked about inclusionary zoning, and there's definitely a need for more affordable housing, but the way to get more affordable housing is bringing down the input costs and or bringing down the risk profile of bringing on development. So, one of the thoughts that originally when they talked about inclusionary zoning is creating more certainty on what density was allowed on a particular site, in which case, developers would be prepared to pay, more for the land, inclusive of that affordable housing component, knowing that they can bring on stream the development in a shorter time frame with less risk. Unfortunately, that doesn't appear to be the direction they're taking, and I think the conclusion is that the development community can probably absorb it, and unfortunately, something's got to give.
Mm-hmm. So not a good outlook for the near and midterm.
Yeah, it would be great. We were expecting you guys to say, "Well, we have an easy solution," and problem solved right there. Why don't we shift the topic and talk about something that's exciting? You guys have a lot in the works right now. What projects are you really excited about right now that people should be paying attention to?
I had to talk about prime condos. We mentioned 8 Wellesley, and obviously that's been sold, and we're moving on to prep for construction. But prime is call it one of my babies. It's a project that's near and dear to my heart, and it's now fully zoned, and we feel good about the market after the launch of 8 Wellesley, and we're hoping to capitalize on that success and kind of bring this 45-story tower, 595-unit building right at the doorstep of Ryerson to the marketplace in the next month or so. I think you guys asked about our conviction and sentiment. I think that says enough right there. The fact that we're willing to launch 2 projects back to back in 2021 just tells you how enthusiastic we are. And this building in particular is, one that we've been working on for many years, and it's a part of the city that's really hard to develop. There hasn't been call it substantial action on Jarvis Street for some time, I think just another call it our 6th building in that area, right? So we're a big believer in the East End, again, we're just excited to really showcase and build off the success of great condos, 199 Church from call it last summer, and really bring some more housing supply to that note, because it's on the doorstep of transit, on the doorstep of a university. It has all the characteristics that we look for in a development site, and I think it's going to be well received by the marketplace, especially at the pricing that we're going to be talking about very soon.
Yeah, that's very exciting. I'm a big believer in the downtown East too, and for those listening along at home, you can go to CentreCourt's/CRELIBRARY and get 10% off a condo. Okay, so it's always harder when you guys are already investing directly in Toronto, but okay, say somebody has a couple $1 million because we have a lot of smaller investors who listen along and have careers in commercial real estate. Where's your ideal place to put it? You got a couple $1 million, you can put it anywhere in Canada, any asset class. What are you thinking about?
Now we're giving investment advice on a diversified portfolio, and I guess it's already established. Not to go into cryptocurrency. I mean, obviously I'm bullish on high-rise condos, and there are various ways that capital can deploy in it. You can actually just go out and buy a condo. Now, some would say that's kind of a retail deployment. You can also do it in a more wholesale way, because there's some deployers of capital that invest in condo projects. So that would be another opportunity. And I guess that's more higher return in theory, higher risk. And then if you're a believer in real estate, you can also go in a more mainstream fashion of buying more income producing assets, whether it's commercial, industrial, office. And probably the simplest way is simply buying the REITs when they're at a discount to NAV. Albeit if they're at a premium to NAV, that would be the time to perhaps buy through some of these syndicated operators or buy yourself directly in real estate. So that's kind of the real estate kind of landscape. I don't know whether you want to go into other potential sectors of deployment of capital, but
right.
That's my outlook on it.
Right. And what about you, Bader?
Look, I'm a big believer in real estate. The very first thing I did after paying off my OSAP loans was to buy a single family rental. I was 21 years old. That's the first thing I bought. I didn't buy a car. I didn't buy a Rolex. I bought a single family home in London, Ontario. That's how I got my start in the business. Back in 12 it was. And today, older, wiser, and very experienced on the property management side of the business. What I would say is, I think Toronto, when I think about Canada-wide, I think Toronto's the place to be. It's the economic engine of the country. I think, Andrew spoke about the different ways you can deploy money. Obviously, I'm a big believer in the condo business. It's a proven asset class. You can see everything we talk about in our candidly our presentations to buyers. Look at the price of a condo relative to a single family home in the GTA, right? And look back at 2017 and see what the trend lines tell you. Unfortunately, not everyone can have a single family home. Most of us will live in condos, and it's a fantastic living option, especially if it's transit oriented and in the downtown. So if you can find a way to invest in that asset class, whether again it's through direct ownership or through a REIT or through a syndicated fund, I think having that exposure to the economic engine of the country and in a up and up market is that's where I have all my eggs.
Okay. Yeah, it's always funny asking that question to guys like you guys, because it's
that's not investment advice. That's just the way I invest. Just so
I know. Disclaimer. Okay, and now one last question, and this is a challenging one. Also, another one that's not on the sheet, as most of these questions haven't been. But if you could give some advice to your younger self, maybe yourself 10 years ago, and you guys have been very fortunate, but what would you tell yourself then? A lot of our audience again are kind of midway, at that changing point in their careers. So very interested to hear what you'd tell yourself.
Yeah, I mean, I know what my father told me when I left law after 6 months, and he came from the old school that if you weren't a doctor or a lawyer, then you didn't have a career. So he thought I was crazy when I left law after 6 or 12 months. I'd say follow your passion. Sometimes easier said than done, but build relationships. Invest in your time into people that you truly care about, and there's nothing more important than the relationships, whether it's on the personal side or on the business side. And I'd say that's something that I certainly pride myself in. And going back in time, I would have probably invested even more time in that. But over the course of a career, having those relationships with, whether it's on a personal front or in business with banks, trades, partners, brokers, planning department, having those key relationships is key. And I'd say that would probably be the biggest thing. And then just following when opportunities arise. Sometimes it's just being lucky and being in the right place at the right time. I remember having a debate with someone about how much of their success do they attribute to luck versus hard work, and they attributed it all to hard work. And I'd say there's an element of luck as well. Being in the right place at the right time. But when that right place, right time does materialize, jump at it and take advantage of that opportunity, because those opportunities don't come along very often.
Right.
Well put.
Yeah. It's I'm not going to say 10 years ago, because that might be a bit long for me, but I think the biggest lesson that I would share with people is be patient. Rome wasn't built in a day. I know everyone's a hard worker, everyone's a rock star, everyone wants success instantly and gratification instantly. Be patient, right? Like it's work hard, keep your head down. Your results will garner attention. And I think that's the biggest lesson. And the other one is, bet on yourself, right? Like I think that's a big one, for sure. Like, not everybody has maybe the confidence, and you have to build up to that level. But once you have a skill set, bet on yourself, and don't focus on what you're good at. Focus on what you're not good at, and how can you get better at those things, right? Like if I'm great at something, that's great, but I want to kind of fix my flaws or close those gaps. So those are really maybe the three things I would share. Be patient, bet on yourself, and really focus on your areas for improvement. If you can do those three things and do them well, you'll find success, however you define it.
Great. So good stuff, guys. We really appreciate being here with you guys and you guys joining us. It sounds like, CentreCourt is not even 10 years old yet. I know you guys have storied careers and a long history in the space, but for a company that's not even 10 years old yet, it's very exciting to see how far you guys have come and where things are going to go. So, thanks so much for your insights today, and we hope to speak to you again soon.
Thanks so much for having us.
Thank you, guys. Really appreciate it. Great chatting.